Well, good afternoon, everyone. My name is Linda Knowlton, and I am your FAMP president for this year. And we'd like to welcome you to a great panel that we have today. We are here with the Office of Financial Regulation, Gregory Oakes, the Director of Division of Consumer Finance, and which I just learned he's been at the OFR for 28 and a half years. So we're going to have a lot of knowledge here shared with us today. We will be going through the presentation from the OFR along with Bill Moran and Brandy Smith, and Greg will be doing those introductions. But as we go through this presentation in the PowerPoint, please put any questions that you have in the chat box, and we'll monitor that as we go. We may ask those questions as we're going, or we may save some to the end. So either way, we want to hear from you. We want to hear the questions, and we know we're going to have a great hour here of information. The Office of Financial Regulation, and specifically Greg Oakes, have always been wonderful to FAMP. We truly appreciate our relationship that we have with them. We have an open line of communication and a high level of respect for everyone at the Office of Financial Regulation. So with that, I am going to turn it over to Greg Oakes. So Greg, take it away.
Thank you, Linda, and I appreciate that great introduction. And it's always wonderful to have an opportunity to work together with FAMP and all of the members and to just share information and be a resource of information and work together. We absolutely value our partnership with FAMP and all of its members, and also recognize that we've had a long-standing relationship of working together and partnering together to make the Florida Association of Mortgage Professionals and its members a great organization, a great group of members, and we understand and value their desire and concern for making sure that there's a great organization out here in the state of Florida, and we have the greatest state when it comes to mortgage professionals. So thank you for that. As Linda mentioned, I have with me today Bill Moran and Brandy Smith. Bill Moran, you've probably seen before in some of these presentations. Bill is our Chief of Bureau of Registrations, and Brandy Smith, who just recently came back to us after about a 6-year hiatus, came back to us and replaced the ever known and very respected Andy Gromer, who said after 35 years he's had enough and he wants to go retire and go have some fun and do things outside of the work environment. So Andy retired at the end of 2021, and we've been very fortunate for Brandy to come back with us. And I told her that she couldn't ever leave again. So I had to let her go one time, but we're not going to do that ever again as long as I'm here. So I know she's got about 6.5 years she's got to stay, but glad to have Brandy back. And she's the new chief of the Bureau of Enforcement and is already doing great things in the Bureau and really doing a wonderful job. And so we're super excited to have her back with us. So got a great team here. Looking forward to sharing some information and answering any questions that we can. So with that, we'll kind of get started. All right. So back us up just a hair.
Something happened here. Sorry.
No, that's fine. It's all right. Now go back one more slide for me. There you go. So OFR is made up of 4 main units within the office. Obviously, the Division of Consumer Finance, where we're located, does quite a lot of aspects of the non-depository financial services and licensing and enforcement, including obviously the mortgage industry and various other aspects of the office. We have our Division of Securities, which is involved in stockbrokers, investment advisors, and licensing and regulation there. The Division of Financial Institutions, which handles our depository regulatory program, the banks, credit unions, trust companies, and the like there. And finally, our Bureau of Financial Investigations. They are not sworn law enforcement, but they are recognized by law as a criminal justice agency. And so they have certain rights and powers there as it relates to that. They do a lot of our investigations that folks may be doing some type of a criminal conduct as it relates to the areas that we regulate in OFR. So that's kind of the makeup of the office, you know, at a high level. As I mentioned myself, Greg Oakes and Bill Moore and Brandy Smith. So mixed up the senior management team here in the Division of Consumer Finance. So topics for today, we've already kind of done the introductions, and then we'll move into the legislative update. We just completed the 2022 legislative session and wrapped that up as one of the years where it's an early session during the even numbered years. So next year's legislative session will start at the typical time, I think, goes in maybe, I can't remember if it's April or March, but it's a couple of months later in the year. And I'll cover that, and then we'll turn it over to Bill Moore to talk about some license and application statistics. And I'm sure he's going to blow you away with some pretty impressive numbers there. That's probably not surprising to you, but when you see it in writing, it is pretty wild looking. Also, we'll talk about renewal results and where we just finished up the renewal cycle for the mortgage industry and kind of what's been happening there. Bill will also share some application tips just to help folks as they're, you know, looking to get licensed in Florida and to navigate through the requirements and make sure that you know, can get through the process quickly and we can get your application reviewed and get you on your way. And then finally, we're going to wrap it up with Brandy. She's going to talk about the examinations and the complaints area and kind of some of the results and things and trends that we've seen coming out of that area. So with that, we'll get started. Talk about the 2022 legislative session. So we had a couple of things that, first of all, let me go hit the button one more time there, Brandy. So first of all, no changes to Chapter 494. We did earlier in the session, we had a bill, kind of an omnibus bill that had some changes in multiple statutes in consumer finance. We had some changes that we had proposed there in Chapter 494. I think this is the second year that we've endeavored to repeal the high school education or high school diploma requirement for loan originator licenses. And we were also looking for some other streamlining of the license and renewal processes, but and regrettably that was not something that was picked up and moved forward in the process. So it ended up with no changes to Chapter 494. Now, what did happen, and just to kind of give you an understanding of the legislative process, there's basically two components to the legislature. One is bills that address any statutory changes or new laws, you know, that are part of that process, and then also the budget process. So as a state agency, as with all state agencies, every time the legislature meets, they develop and present and move forward and pass a budget. And that budget includes basically the spending or appropriation authority for each state agency. And so it tells us how much money we can spend in salaries and expenses and other categories, how many employee positions that we have appropriated to us as we go forward to the next fiscal year, which will start on July 1st. And so we, as you'll see in a few minutes when Bill talks about some of the licensing statistics, we have seen an unprecedented increase in mortgage license applications and renewals. And quite frankly, over the last decade, we've seen a steady climb. With certainly the last year, it's just been off the charts. And so we've fortunately been able to work through that with our current complement of staff, which is about, I want to say about 10 or 11 positions that deal just in the mortgage licensing area and renewals. And so it's gotten to the point where we recognize it's not feasible for us to continue to maintain the same level of service that we desire with the current complement of staff. And so thanks to Bill Moore and his efforts, we put together, quite frankly, a presentation and some information that they could not ignore. And we were successful in having an additional 7 positions added to Bill's bureau. And those all 7 positions will be solely dedicated to mortgage licensing and renewal. So if you look at, we had about 10 positions, we got 7 more. So we've got a 70% increase in positions. So we're really excited about that. Those will start effective July 1st. Obviously, we have to go through and advertise and hire those positions and basically bring those brand new folks on board and get them trained and get them rolling. As a part of that, the division has an allotment of funding for what we call OPS funding. OPS is other personnel services. These are basically just hourly wage employees. They don't necessarily have all the same benefits. While they can get health insurance if they work up to at least 30 hours a week, they don't get vacation time. They're typically temporary type staffing, and so they've increased our funding is there, and the idea there being we can use that to really handle the fluctuations and the peaks and the valleys in the volume. But we've got 7 brand new positions here. We're really excited about that. We're hoping that that's going to yield great benefits, especially in the renewal processing, and give us the much needed staff there. So really excited about that. And just so you understand from a budget standpoint, how the office is funded, the Office of Financial Regulation and certainly the Division of Consumer Finance, we are self-sustaining. We're operating under a trust fund, a regulatory trust fund. So the application fees, the license renewal fees, they are what supports our agency and supports us to be able to hire staff, hire examiners, and do the things that we need to be able to do to enforce the statutes and make sure that the right people get a license. And if we need to take it away, we need to take it away from them. So our agency is not funded. The Division of Consumer Finance is not funded at all by a single penny of general revenue tax dollars. We are solely funded through the license fees that we collect as part of our licensing process. So just so you know that, that's how we operate here. So, really looking forward to that. And we're hoping that you're going to see the benefits on the end as, we have a full staff and really can get back to processing times that we think are really important for the industry, and to be able to get people working quickly and be able to sustain the volumes that we're dealing with. All right. So from here, I'm going to turn it over to Bill Moore and let him take it and go from there.
Thank you. Again, I'm Bill Moore, and I'm the Chief of the Bureau of Registration, and happy to speak to everyone today and put together some stats that will hopefully give you a little picture of what's going on in the mortgage industry on the licensing side in Florida. Brandy, next slide, please. So I first started off with, let's just take a look at our active licenses in Florida. And this data is as of March of 2022. You see I have a column there with our 2022 stats with our loan originator, and going down the list there are our companies. First thing I did was let's just do a 1-year look back. I look back to the end of our OFR's last fiscal year, which is June 30th. So a little less than a year. And as you can see, doing a 1-year look back, we have some pretty significant increases in active licenses. Next slide, please. So I think this is where things really pick up a little bit. This is I did a 3-year look back period of our active licenses. It's the same format as the previous slide. And I looked at June 30th of 2019. And for me, that was kind of the calm before the storm, or kind of the calm before COVID. And as you can see, we've had significant increases in all areas of our active licenses. So for fun, I did, let's look at the past decade. Wanted to take a look back and just kind of see how the industry's grown really in 10 years, really since a little bit after the kind of the meltdown we had in about 12 years ago. That is not a misprint where it says mortgage broker branch. That is almost over 1,200% increase. The mortgage brokers as well have a lot of one-man shops. A lot of people, I think, were a loan originator for a year or two and probably said, hey, I can do this on my own and maybe make a little more money. And I think that's what happened. A lot of the applications look like they're one-man shops, and that's the big increase on the mortgage brokers. And obviously the loan originators kind of speak for themselves there. So obviously we have this, as I've shown, had this big increase in licenses over the past 1 year, 3 year, 10 years. So obviously to get that license, what do we need? Well, we need to get an application, right? So took a look at our recent stats in terms of applications received since July of last year, and give you a minute just to kind of digest this graph. Got a lot of good information on here. That blue bar is going to be our monthly loan originator application received. Our red is going to be a combination of our lenders and brokers. And our green is going to be our branches. So as you can see, there's some significant volume, really in all areas. I know the blue is taking up most of the graph, but as you'll see in a minute, really all of those are significant increases. So to put that in the context, look at the bottom of the graph. I kind of highlighted it there to give you an idea of the loan originator monthly volume, and to put this graph in the context. So if you look at my highlight at the bottom, in 2019, you can, hey, Brandon, is there any way you can make that a little bigger? I think someone's commenting, they might not be able to see it.
I don't think so.
Okay. I'm sorry about that. If you look at the 2019 at the bottom, we were used to getting about 688 and 700 loan originator applications a month. And obviously, where we're at recently, we've seen a significant increase. Next slide, please, Brandy. Went back a little bit further. I think this one probably going to give us some good info as well. So I went back to July 1st, 2020 to June 30th, 2021. Same methodology as the other graph I had shown you. Obviously, April was our big month. And let me put some of the broker, lender, and branch stats in perspective. So in 2019, we were used to getting about 50 combined broker and lender applications a month. So as you can see, if you look at our red, obviously we're experiencing receiving a lot more than just 50 applications a month. Also in 2019, just to kind of put it in perspective, about 165 branch locations we were receiving a month in 2019. So obviously we've in some months we've more than doubled. What's also interesting on this, and just looking at some things, if you look at April 2021, that's been our big month here in the past few years. In April of 2020, where pretty much everyone was locked down due to COVID, we had our testing and education centers were pretty much closed down. Fingerprinting was not available for applications. So in April of 2020, we received 414 loan originator applications. So just to kind of give you an idea of what happened from April 2020 to April 2021, it's probably about a six-fold in applications. The other thing I wanted to say, go back real quick, Brandy.
Sorry about that.
That's okay. And just taking a look at July 2020, I do not have May and June of 2020 on the graph, so I apologize for that. But just going back to what I was just saying, April 2020, we received about 400 loan originator applications. And about 3 months later, we took off into over 1,000, 1,200 up to 2,300. Just to give you a little flavor on how fast things took off once really the COVID era hit for a timeline. Next slide, please. Just like to give everyone an idea of just the breakdown of where all our loan originators are by state. And obviously, Florida being number one, this held pretty steady from year to year. Florida is going to be 1, California is going to be 2, Michigan's going to be 3. I did look at everyone licensed since March of 2020, kind of looked at the what I call since COVID. Took a look at the same percentages just to see if anything had changed with the dynamic of COVID. The only significant change I saw with the states is California bumped up to about 13%. So in the past 2 years, got a little bit more people coming from California operating in Florida. I think Florida's percentage might have ticked down about 1%, but the only significant state change was with California was at 13%. Next slide, please. Okay, let's talk about renewals. So we recently just finished up our 2022 renewing for 2022 renewals. Here's some on-time statistics, and our on-time renewal period, as you're probably aware, is November through December 31st, 2021. Taking a look at the percentages, we got the 85% for loan originators, 94% for the brokers, 97% for the lenders. That's pretty consistent from year to year. I will say the 85% is probably a little low for on-time renewals. I think a lot of that, as you're probably aware and may have experienced, I know NMLS had some issues with renewals this year. That might attribute to it. The other thing is we had a lot of new loan originators this year, a lot of new ones. And I think some people either weren't aware of renewing, forgot to renew, maybe some requirements they had to do, they kind of maybe didn't get done in time. So that on-time renewal for loan originators, I think is a little low. But otherwise, everything is pretty much standard, the percentages. Next slide, please. So wanted to talk about late renewals, and our late renewal period is January through February 28th. These percentages are pretty consistent, the 4%, 5%, 2%. That's pretty much what we see every year. The difference is the numbers. So obviously, we've had this unprecedented increase in active licenses, and the sheer number of people renewing really put a damper on our staff to get things done on time for late renewals. So if you renewed late, we definitely tried to get your renewal reviewed as soon as possible. The reason why that's important is because if you renew on time, you can continue to operate until the office reviews your renewal. For those that renew late, you are not able to operate until the office essentially reviews and approves that renewal. So again, just the sheer number of people renewing of that 4%, we're used to having for loan originators maybe about 800 late renewals, and we had over 2,100 this year. Going back to the late renewal period, by about January 20th of this renewal period, we probably already surpassed the number of renewals we were used to getting in a full renewal period, just to kind of give you an idea of just how busy the late renewal season was. So
Bill, we had a question in the chat, which I responded to. Go ahead.
Did you respond to it, Greg? they
I did.
kind of, as I'm reading the slide, I sometimes I can't read what the comment is, so I apologize for that.
But yes, it is state licensed loan originators only. Our regulatory authority does not extend to the registered mortgage loan originators that are working at banks. So all of this information we're sharing with you today is strictly directed at state licensed loan originators and state licensed brokers and lenders. Go ahead, Bill.
Next slide, Brandy. Just gave a little graph here just to give you an idea. This again is going back to what we've already kind of seen with the application volume, what we've already seen in the active licensees volume, just the increases in who is eligible to renew. I just kind of took a look at the past 2 years and compared them to this most recent renewal season. And as you can see, we're having significant increases in all areas for renewals. Kind of more of the same on just a tremendous amount of volume. Next slide, please. Let me give you some application tips real quick. These first few are probably going to be the most effective for initial applications for anyone that is going to be applying. We did pass a rule a little over a year ago, which we're referring to the withdraw abandon rule, which essentially is once the analyst reviews your application, if they have any additional information that they need, they're going to post a license item in NMLS requesting certain information from you. You as the applicant have 45 days to provide that information. And also in that 45 days, you have the opportunity to request an extension and get an additional 45 days. So essentially, you would have a total of 90 days if you request the extension to provide those documents to the analyst for review and to potentially approve your license. What this rule does is after day 90 or day 45, day 90 if you requested the extension, is just simply would allow the office to consider the application withdrawn abandoned, and we would essentially change that status in the NMLS system, and the applicant would have to completely reapply if they wish to continue to seek to be licensed. The old way, if you're familiar with it, at the time we kind of didn't hear from the applicant, can't get in touch with them, we would issue what was called a notice of intent to deny, which would be a document that would be emailed to you and just saying, we're putting you on notice that we're going to essentially deny your application because you haven't provided all the information. That no longer is the case. We're simply going to withdraw, abandon that application. This is a great rule for the office because the amount of time we were spending trying to get in contact with applicants who have really disappeared and simply do not wish to go any further with the application process allows us to withdraw or abandon that application. If your application is assigned to an analyst and you need more time or you have questions, just keep in contact with your analyst. Our goal here is not to withdraw, abandon someone in the middle of their application. That's not our goal. But if we get to a point where we've requested information and we're just not hearing back from the applicant, this gives us that ability to just withdraw, abandon it, and move on to another application. My next bullet point for applying for any license type is use the NMLS checklist. I know that kind of seems pretty basic, but in speaking with applicants and talking with applicants, it seems the people that follow the checklist and know about the checklist have a pretty good time getting through the application process, and it's pretty smooth. I come to find out that people that don't know about the checklist or probably didn't read it tend to have problems in the application process, and I know they get frustrated. So please, anyone who's applying, look at the NMLS checklist. If you have questions, please call us. The two things on the checklist that I think will best help you and are great reminders is Florida does have a state-specific background check. Probably one of the few states that does that. This is probably the most common road bump for new applicants. The most common call we get or email is, you guys have had my application 3 months. I haven't heard anything. What's going on? We take a look at the application, what we can see, and we say, you have not even completed your state-specific background check. Therefore, based on the checklist, we haven't even received your application. We really haven't even looked at it because you haven't completed all the requirements. That is obviously a huge frustration to the applicant. Now they have to go out and get the state prints. But again, the checklist is definitely going to give you the information you need to not have that happen. The other thing is the high school diploma requirement. Some people just forget to provide the information. We'll generally post a license item, and generally the applicant provides the information, and we approve the application. But that's just a little speed bump for people that might take a few more days to get your license. Also, the checklist will tell you you do not need a copy of your high school diploma. We're okay with getting certain information about when you graduated, what high school you went to, your name when you graduated. Some people are looking for their high school diploma from a certain number of years ago, and they're having trouble finding it. And we tell them, hey, just give us this information, and we can move on. So again, the checklist has it on there, and I hope everyone uses that in applying for a new license. I put two contact information at the bottom there from two different agencies, obviously NMLS and OFR. I think the big thing here to best help you, if you have a question and the office has not started review of the application, it's something with getting something into NMLS or just some basic requirements, you might want to start with NMLS. If you know your application has been received or you're pretty sure you followed the checklist and you've given us everything that hey, the office should have my application, then definitely call our office or email us at that email address so we can give you some information on where the application is.
Yeah,
Next
just real
slide.
quick, just to emphasize, the stats that we shared with you regarding the license and renewals. I mean, these are basically the basis behind which we went to the legislature and said, we no longer have enough staffing to manage the workload in a manner that we would like to do it. By law, we have 30 days to review an application, and by law, we have 90 days to approve it once it's complete. We certainly don't like being up against those deadlines at all. And we pride ourselves on being one of the fastest states as far as processing license applications. And so the volumes have been, quite an impact to us. As I mentioned earlier, we've had pretty much 10 employees probably since we went on the NMLS system, going back to what you saw where Bill shared something from 10 years ago. And so those hundreds and hundreds of percent increase, 1,000% increase in the branches, we have endured that with same amount of staffing. And so, we were very successful, and quite frankly, of all the budget issues that the agency as a whole had put together, I mean, there are other things that affect consumer finance and other divisions. This one right here, quite frankly, was the one that everybody said, yep, you got it covered. We agree wholeheartedly. You need the positions. And so this was the easy one for us to get it approved. And there was never any debate or doubt from the staff and the Senate and the House that this is what we needed. And we were successful as a result of that. So, I know sometimes it gets frustrated, especially with renewals. Unfortunately, we have deadlines with new applications. We don't necessarily have a deadline with a renewal, but as the statute says, as long as you file your renewal on time, you can still work while we're processing your renewal. So, we're looking to get fully staffed fill these new positions and be able to handle the application and renewal volumes that we're seeing here lately. And so we're really excited about that and hope that you see the benefit of that as well, and won't be waiting so long for us to be able to get your renewal process. So we're really excited about that. Thank you, Bill. All right, I think we're going to turn it over now to Brandy and let her take it from here.
Yeah. So I'm Brandy Smith. I am the new Bureau Chief of Enforcement here in the Division of Consumer Finance, as Greg introduced me. And I just want to go through some of our, stats from examinations. We just kind of pulled together some of our stats from last fiscal year to this fiscal year, current to February 28th. We broke it out into compliance filing and field exams. And so for the mortgage lenders, you can see that, we've done a total of 40 so far, well, through February 28th. And then, of course, for mortgage brokers, 118 total. And for loan originators, 7 total. For all, making 165.
And Brandy, will you explain the difference? Sorry, back up one slide for me and just explain the difference between a compliance exam and a field exam.
So a compliance filing exam would be your failure to file or failure to timely file your mortgage call report or your financial audit report. There are various NMLS report requirements that you have to file for your 494 license. And, so that would be a compliance filing, whereas the field exam, that could be an on-site or something that we've been notified of through a complaint. We would do a desk exam on that licensee. So some of the outcomes. Now, I know I just showed you some of the exams that were opened as of this year and last year, but these percentages don't necessarily relate to those actual exams because these are just exams that were closed in this fiscal year from July 1st to February 28th. So we have, 41% of lenders that were closed with no action, 24% closed with a notice of non-compliance. And then, there's various ones here. And these percentages don't make sense, but the reason that they don't add up to 100% is because it could have been an exam that's been opened 2 years ago or 2018, where we're just now closing them this year because they take a little while to pull all the records together and get everything completed.
Brandy, I think there's a question in the chat. And
Yes,
what
there
does
is.
the field exam of an LO consist of?
Well, what we normally have, I think those would be more of a desk exam. That would be one of the ones where we would probably describe as a desk exam, because we would receive a complaint on a loan originator, whether sometimes there'll be like a whistleblower type complaint. Someone from another company may reach out to us and let us know that they have loan originators that aren't licensed. It could be, Greg, what would be another example of that's kind of the only one I can think of off the top of my head.
Yeah, usually the loaner, so typically when we conduct an exam, we normally go look at the company for the field exams. So we're going in, looking at a broker, looking at a lender. There may be loan originators encompassed within that examination. And so we tag that loan originator as part of that exam. And so that's where you see these stats that kind of pick up, why would we do an exam on an individual? The most likely scenario is unlicensed activity. Either the loan originator in an origination capacity, and sometimes we have that same scenario with contract loan processors that are not licensed as well. So that's why we usually an exam of a loan originator is not something that we normally do. It's just when they get tagged because we've gotten feedback that this particular company is using a licensed loan originator to close everything, but they've got some unlicensed individuals there that are really doing the work. And so we include in that examination, we tag the individuals, and that's where you see them get picked up on from that regard, that they were doing business without a license. That's the most common scenario when it comes to an individual. There were one or two incidences that I can recall where we've had a consumer complaint about an individual that resulted in us taking action on the individual licensed loan originator themselves. Misrepresentations of or mischaracterizations of, some aspect of the loan process, and after our review, we found out that the loan originator themselves was involved in a violation, so we took action on them.
Thank you, Greg. And guys, I can't see the guys and ladies. I can't see the chat and run it, and so I apologize for not seeing that question.
That's all right. I got you back.
Thank you. All right, so now I want to go over some of the common violations that we'll see. So again, the compliance filings, which will mostly be your failing to file the mortgage call report or untimely filing of the mortgage call report, failing to file or timely filing the financial audit report, and or maintaining your net worth. So there is for the lenders, there is a net worth requirement, of course, for just without servicing 63,000, and with the service endorsement, they're required to hold 250,000 net worth. Another common violation would be RESPA and TILA. And although we would not actually cite these individually, some of the common findings are payment or receipt of fees, advertising and triggering terms, loan estimate or good faith estimate requirements, affiliate disclosures, interest rate disclosures, and then servicing requirements. Additionally, we see maintaining your advertising file. And I would say a good example of that would be you have your loan originator who is advertising on their personal social network. And so those have to be maintained. I think it's really difficult to probably keep up with those, considering if you have a lot of loan originators and all of them are advertising on their personal social media. But just keep in mind, those do have to be required. They do have to be kept for up to 2 years.
Yeah, and I really want to emphasize here, the number one compliance filing, that's not just a chance there that it's number one. It's number one because it is number one. Quarterly mortgage call reports have to be filed every quarter. The lenders, if I recall correctly, are probably better at getting these reports in on time, but the mortgage broker companies are by far the worst perpetrator of being late with their call reports. And you got 45 days at the end of the quarter to get that report uploaded in NMLS. And, I'm just going to tell you, we try to be understanding, and we know that that's probably a painful process to have to do that call report. We don't typically really you don't get our attention until you're probably about 10 days after that. Now that's not something that I'm going to ever put in writing to you. So just be aware of that. And unless you're like late constantly. I mean, I can't tell you how many cases that we deal with, and I have them every week where folks are late for a year and sometimes 2 years. They're late on every report. And, so in that case, yes, you might get cited for being 7 or 8 days late because you've been late every single quarter, and the others you were late. I've seen them be as much as a half a year or even a year late on filing those reports. So we really cannot emphasize enough the importance of getting those reports in on time. You would be shocked at the amount of resources that we burn through just trying to keep up with, quite frankly, enforcing that. And it's not something we get any joy from. I can promise you that there's not a person in the Division of Consumer Finance, nor does the commissioner get any commission on fines. That goes straight in our regulatory trust fund. It is not benefited to us in any way. So there's no commissions there. I promise you that. So we don't get any thrills out of issuing fines, but I can't tell you how many times, we've, tried to help people if we maybe giving them a, kind of a slap on the wrist, so to speak. And then next thing you know, very next quarter, they're late on filing that call report again. So this is really an area that we would really, really, really love to see an improvement there. And we send notices. I think NMLS sends notices on this, but I know that we send notices every quarter as well through email, just to remind everyone to please file those reports. And we have staff dedicated solely just to this particular requirement here. And the audit reports are, quite frankly, those are one of those that we take a little bit more serious approach with those, because having a lender who is late on submitting their financial audit report, it's not uncommon that the reason they're late is because they're deficient in their net worth and they just don't want us to know that. So, we really look kind of unfavorably on those late reports with the financial audit reports. And so just, please make sure you get those in there. If you are going to be late, it's okay if you call us or email us or let us know. I don't have any statutory authority to say that I can waive any penalty. But when we have people communicating with us, we certainly, are looking, to be understanding, as long as we know they're working on it. I've had circumstances where the CPA of a business passed away right before the financial audit report is due. And so, you got to go out and find another CPA and you got to start all over that process. So just, understand we get that situation. Let me see, we have a question. As a broker, we get many notices. It helps to keep on top of it for sure. I like those notifications for the MCR. Well, thank you for that. We want to help you be compliant, and that's our goal at the end of the day, because if you're filing those on time, quite frankly, that gives us the capability to focus our efforts on things that, we really want to focus on, which are the bad actors. Sorry, Brandy, didn't mean that.
Nope, you're okay.
You.
All right, so some other common violations would be maintaining your loan journal, the loan originator and loan processor employment. So you can only hang your license with one entity. And then also, a loan processor that has not filed their declaration of an intent. Any unlicensed mortgage activity, acting without a license or making payments to an unlicensed entity. And then, of course, your filing updates. So if you go in there, my apologies, just make sure that you're keeping your application and renewal information up to date. Make sure that, you're filing, if there were an administrative action, just make sure that you're filing those with the office, keeping your principal loan originator and or your branch managers up to date. And of course, the contact information, because if we don't have, updated contact information, we can't reach out to you to let you know there is an issue.
And I don't know if it seems to me, going back one page, if you would, Brandy, real quick, under number 6, acting without a license or payment unlicensed entities. A lot of times what we have found in the past, and I don't think we've seen that many cases lately, which is a good sign, where a loan originator would set up an LLC. And so what they would have is they'd have the broker or lender pay their commissions and split it to an LLC that they created and to themselves individually, presumably for some type of a tax break. But the problem is that LLC is an unlicensed entity. So not only are we going to take issue with the LLC, which the loan originator set up, we're going to take issue with the broker or the lender who paid those commissions to an unlicensed entity. That is a violation of the statute. So just be aware of that. I've heard both, the brokers and the lenders encouraging loan originators to set up the LLC or the loan originator doing that on their own. But just understand that that's really going to get everyone in a little bit of a deep hole there, and we want to try and avoid that. But I haven't seen those cases lately, so it sounds like, you know, maybe that's on the improvement, and that's great. We appreciate that.
All right, so as Greg mentioned, of course, you can see that this first bar here is the mortgage brokers not filing their mortgage call reports. So this, you know, or it's filing them timely. So that's definitely the most common. And then this next bar here is the lender's mortgage call reports. And it, like I said, it could be timely or failure to file altogether. And then next most common would be their audited financials, whether filing them timely or not filing them at all. So now we'll switch gears and go over into the complaints and give you some statistics on the complaints. So again, all of these fiscal year to date is as of February 28th, but we've received a total of 12 loan originator complaints, 32 mortgage broker complaints, and then 204 mortgage lender complaints. Those are, you know, the mortgage lenders are a little bit higher. Some of the complaints received are about 71% on their first mortgage. And then as you can see, the rest of the stats regarding the other mortgage products.
And most of those lender complaints are typically going to be a servicing type complaint. Someone, you know, complaining that the servicer didn't pay their insurance, didn't pay their taxes, or, you know, some issue with a servicing aspect of the mortgage. That's most common where we get most of the lender complaints, and why you see that number really higher. You know, probably broke it down between servicing and origination. The origination complaints would probably be more in line with the brokers there, but it's typically the servicing where we get a good portion of our complaints. And when you have a hurricane come around the state of Florida, you know, the servicers are dealing with deferments of mortgage payments. They're dealing with insurance claims with their insurance company because their house was damaged. And then they've got to work through the lender. Once they get a check from the insurance company, the lender's not going to just sign off on that check and give them the money to go have, you know, someone throw up a cardboard roof. So, you know, there's an extensive process. The servicers are bound to the GSEs, the Fannies and the Freddies of the world, you know, as far as what the processes are and the procedures for handling those insurance claims. So they have some very stringent processes they have to follow. But every time we have a hurricane come through, after that, we typically get a rise in complaints because folks are just frustrated with that process, and we understand that. You know, and even probably during COVID, when there was a lot of deferments, you know, in that regard with COVID, that, you know, the complaint volumes will increase when those circumstances come around as well.
As Greg mentioned, you'll see here for the mortgage lenders, the highest volume is definitely loan servicing.
I saw your thunder. I'm sorry.
Nope, you're good. You're good. But we would also, you know, we would like to point out that the overall complaint number has not been as high as in the past, which is, of course, is great news, considering we anticipated a higher volume of complaints due to forbearance. So I think in 2020, you know, we received quite a bit more complaints going into forbearance due to the uncertainty and changes with the CARES Act requirement. It appears that the servicers, though, based on the complaint numbers, have done a really good job communicating this information throughout to borrowers throughout for the forbearance process. Recently, we have received a few complaints involving the borrowers not hearing back from loan modifications, not really, you know, digging into that a little bit more. And then, of course, would like to point out that we have received not a lot of loan originator complaints, but the volume has gone down, but it's increased in the severity. We've got some possible mortgage fraud examples. where the patterns of fraudulent income information and loan originators preparing fraudulent documents rather than using the company software to prepare the closing documents. So what you should do if you receive a complaint, of course, read it thoroughly, make sure to provide a written response within 15 days, and make sure to provide the loan file and any and all supporting documents. If you have any follow-up questions, you can definitely reach out to your OFR examiner that's assigned. It should be on the contact information for whatever you receive. I would also like to point out that we reach out to you by email for your complaints. So if that information, again, if your application is not up to date with that contact information, we're unable to reach out to you. So, or it may just go to the wrong person. So definitely make sure that you're maintaining and keeping that information up to date. Another one that we would like to point out is maybe the DBA. If the DBAs aren't being updated on your information, that kind of prevents the borrower from being able to look you up. So if they can't confirm licensing, it might, it might make them go somewhere else. You never know. But I think that that about covers what we have for today. Well, for the exam and the complaint statistics.
All right, let me see, make sure my mouse work here. Okay, great. I just want to make sure we didn't cover any. Well, that pretty much wraps up our part of our presentation. We really, I know we probably want to open it up for some questions, but just want to, again, emphasize how much we appreciate the opportunity to share this information with you. We hope it's helpful. We're sharing it with you to help in any way possible. We just, we really want everyone to just, not sidestep, we're all human. We totally get that at the end of the day. But, anything that we can do to help you, kind of stay out of the troubled waters, so to speak. And, we just don't want you showing up on our radar, but, we really enjoy the opportunity to share this information, and I want to again thank FAMP and Linda for doing this and making this available to us. So we're available for questions.
Yes, let's, if anyone has some questions, let's go ahead and add them to the chat box. I had a couple questions for you just while we're kind of waiting for people to speak. If you don't have a problem with that. So it could be for Bill and or you, Greg, as we move into this industry shift that we're experiencing right now, higher rates, of course, going up, refinance volume going down. Do you have any predictions for the year as far as in 2022, as far as origination, new loan applications? You think we'll see a slowdown there? We'll see less renewals? What are your thoughts on that?
Go ahead, Bill. I'll let you chime in on that.
Sure. So I can tell you as of today, we have seen zero slowdown in initial applications as of today, where if you kind of remember that graph I had put up earlier, we're probably going to be between 1750 and 1950 for loan originator applications this month. If you also look at that graph, I think it was January of 2022, we had almost 400 branch applications. That was the highest we've had in years, maybe probably a decade plus. So from looking at that short, looking from January to March so far, we have seen no slowdown as of yet. And in fact, we had a record number of branches just 2 months ago. Now, obviously with the changes, are we going to see a slowdown? We have not seen it yet. Possibly. We would first see it in the renewals, as you indicated. We would see how many people are eligible. And again, generally we're at 90 to 92% renewing. And that would be the first indicator for next year of our active license base.
Okay. Now, when you said an influx of branch applications, can you share, is that just all over the state, or is it one particular area of the state or a couple areas of the state?
I don't have demographics on where. I'm sorry. That could be something maybe we could look at. but that
Okay.
would be branches for both the brokers and the lenders.
Okay. All right. Another question that I've had people call me about as far as the approval for the mortgage business, the mortgage brokerage business, so that have not been approved for 2021. Is it you're a little bit? It seems they're a little behind on that. Do you feel that's going to be caught up here soon?
Yeah, we're definitely behind on the renewals. And
Okay.
again, if they renewed on time, they can still operate.
Right.
If you have a few people that are having a high level of anxiety over that, please, if you want to email me or give them my email address, I'd be happy to look at a few for them.
All right, sure.
Again, going back to what Greg said on getting more positions, I can't tell you it's going to be all caught up next month, because then I would not have asked for 7 positions. So that kind of, we're working on it. But however, it's just based on the staffing that we have. Obviously, the initial applications are taking up a large portion of time, but we are working on the renewals.
Okay. All right. We have a few questions in the chat box, Bill. So let me go back to that
Sure.
real quick here. Let's see. We will get a copy of this webinar to everyone that's in attendance today. There was a question. Here's one. Are MLOs allowed to give their clients a gift after the close of the loan? Can this gift be cash? That's for you, Greg.
I can only suspect probably not, but we'd have to go back and look at, I don't know that that's something that's covered specifically under 494. We'd have to go back and look at maybe RESPA and see if there's anything there that's covered under RESPA. I honestly couldn't speak to that right off the cuff. We can go back and do a little research on that and kind of share that back with you.
Sure. Absolutely.
I just don't have an answer on that one off.
That one you do not want to answer, as you said, on the cuff.
I'm not going to guess on that one at all. I mean, anything that when you talk about giving gifts makes a little nervous.
Okay.
I think RESPA is the go-to part. Is going to. I
Right.
think it might even address a little bit on gifts. Now, I'd probably leave it at that. Definitely
Okay.
RESPA is, I think, where we want to go.
All right, another question. Will the OFR offer to give a webinar about audits in mortgage offices, basically given an instructional class of all the items a mortgage company should have ready should their offices get an audited by the OFR? So would you do a webinar?
Randy's shop there, but I'm sure we'd be happy to work on putting together some type of a webinar of kind of what's involved in the exam process. What are we typically asking for? It'll be a little different between a broker and a lender, but I'm definitely sure we can put together something to help there. We want to make that process as easy as possible and as painless as possible.
Right.
So yeah, I'm sure we can look into doing that.
Okay. You and I can talk about that for sure. So
Right.
And there was just a comment, but basically you've stated that you're not staffed up at this point. You're working on staffing up your team. So there is a question that you may or may not answer, but I'll go ahead and read it if you do not mind. I know it isn't your department, but it is next door. So have a question about condo legislation. In 2008, the Division of Florida Condominiums, Timeshares, and Mobile Homes lost enforcement powers. Is there a sign of a return to this enforcement?
Wow, that's a great question. So I think that comes under Department of Business and Professional Regulation. They're actually not next door.
Knock, knock.
They're a little bit of ways from our office. And honestly, I could not answer that question for you. I don't have a clue, what's going on in that division. I would reach out to them. We just, I got all I can handle with about 6 or 7 industries and consumer finance to keep track of what's going on. But I unfortunately don't know the answer to that question.
No problem. And this kind of relates to the question before. Does the OFR provide an audit checklist so we can thoroughly self-monitor?
I don't know that we don't really publish an audit checklist. Yeah, it's just not one of those.
Go to the Florida statutes, right?
And absolutely. If you're complying with the laws and the rules, you're covered. That much I
Right.
can promise you. Yes, but I think we can certainly look at, as we put together some type of a webinar, just kind of, giving you some ideas of what we're looking for when we go do an audit.
Right.
And some ideas of the questions we're going to answer and the information we're going to solicit.
Okay. There was one last question about the current question about gift to referral partner. And I think, as Bill mentioned, that goes back to a RESPA
Right.
answer, not an OFR answer. So let me look to see if I have any more questions. I did have one about, do you see a big influx of mortgage processing shops as far as being licensed? And do you see any influx of those type of shops?
We are seeing probably an influx of phone calls of people
Okay.
kind of asking some questions on that type of activity.
Okay.
In terms of the applications, probably a little bit. In the application process, sometimes we may not fully know if they're only going to be doing processing or maybe they're going to be doing brokering. So I'd probably have to look a little closer at some of the applications to see.
Okay.
I think the big thing we've seen definitely in the past 2 years, as I kind of mentioned before, is the increase in the kind of what I call the one-man shop mortgage
Right.
broker.
Mhm.
So I think we had a lot of people got their 1-year experience being a loan originator. That was in 2020. And then 2021 was the year of a big increase of actually the mortgage broker applications. We saw a lot of new businesses. Generally the person, one-man shop, they're the owner, the control person, the qualified individual, the principal loan originator, they're everything. They got their 1-year experience and now they got their own business.
Okay.
I think that was the biggest thing for 2021.
Interesting. That's really good feedback. A couple last questions here, and then we'll wrap it up. We've had a lot of contract processing companies out there. My question is, are they regulated and or audited like the mortgage brokers?
So when we set up the statutory kind of scheme there for contract loan processors, what's set up in the statute is if you, as an individual, you're a contract loan processor, you've got to be licensed as a loan originator, and you have to have that declaration of intent on file. So that tells us I'm licensed, but I'm only doing contract loan processing. I cannot originate if I'm a contract loan processor contracted by multiple brokers and lenders. So they have to be licensed. Now, if they by chance work for a company who is the one who actually is contracted with the brokers and lenders, we don't require the company itself to be licensed, just the individual loan originators. And so when we go in and we look at that broker or lender and we see that they have some contract loan processors that they're paying, we're certainly going to look at all that activity. If there's some concerns there, we may dive more into that issue and find out if there's anything that we need to be concerned with. The company itself that they may be employed by is not necessarily required to be licensed.
Okay.
And we put language in the statute, you can't, as a loan originator, you can only work for one company at a time. We made an exception to that for contract loan processors. But we don't require maybe their employer to be licensed. We do require the broker or lender, obviously.
Okay, one final question. What is the view on split or co-marketing and the rule with loan officers and real estate brokers and agents?
Oh, that's a loaded question there.
That sure is. That sure is.
Yeah, and I think, again, we probably have to go back to RESPA and look at that. We made a conscious effort some years back to try and clean out a little bit of the statute and really point our authority towards TILA and RESPA when it comes to a lot of these things. So we don't have that much in our statute. We look at TILA and RESPA. So if you violate TILA and RESPA, it's a violation of our statute. So I'd have to go back and look. Those are, we can add that to the questions, that we can go back and do a little research on and see where we can point to in RESPA that may cover that particular issue. You got to be careful that you're not paying fees to an unlicensed person. So a broker or lender can't pay commissions to an unlicensed person. But I know that whole real estate broker agent, I know we've got a lot of real estate brokers that are licensed loan originators. And so those are certainly dicey situations there. And I think this is always a common question that we get. We just have to go back to RESPA and look at that.
Okay. All right.
Research on that. Sorry, I don't have an answer right this moment.
Oh, that's okay. You guys have supplied us with a wealth of information, and updating, just the updating of the licensee is just fascinating in itself for us. So Greg, Bill, and Brandy, we thank you so much for taking the time out of your busy day, as we know
Sure.
it's so busy with the renewals, and providing us and continuing to provide all FAMP members and the licensed loan originator information like this. For everyone on the call, they will be visiting and will be speaking at our convention in August, our annual convention. So stay tuned for that and information. And Greg, again, cannot thank you enough for all that you do for FAMP. So we really appreciate it.
All right. Thank you very much. And
all of you out there, thank you for supporting FAMP today. And we hope that you are a member. If you're not, please join. This is the type of information you do receive as a member benefit. So everyone have a wonderful afternoon. Thank you, guys.
Thank you.
Bye. Thank you.
Thank you.
Bye.